You think your bank is a vault? It's not. It's a siphon. You've seen the monthly statements, the maintenance fee, the paper statement fee, the minimum balance penalty. They frame these as standard business costs, but they're not. They are calculated, structural leaks designed to bleed your capital dry, one tiny percentage point at a time. And if you're still using the same big box bank account you opened in college, you are literally paying them for the privilege of them losing your money to inflation. My name is Walter, and I spend way too much time obsessing over the structural engineering of personal finance. Look, if you're someone who's tired of feeling like the game is rigged because every time you save a little it just disappears, stick around. We're going to patch the holes in your financial boat today. Most people think, oh, it's just $12 a month for the account fee, that's not a big deal. Actually, it is a massive deal. That's the bias talking, the idea that small numbers don't matter. But banks are masters of frictionless extraction. They rely on the fact that you won't bother to move your money because switching banks is annoying. They've built their entire revenue model on your apathy. They don't want you to be wealthy, they want you to be a permanent, low-level customer. When you look at your balance and see it hovering, never quite growing, that isn't a lack of saving. That is a systematic, engineered drain. You aren't losing money because you're bad with it. You're losing money because you're playing the game on a field that's tilted against you. Let's look at the numbers. Let's say you have a standard checking account that charges a $15 monthly fee because you dipped $50 below the minimum balance. That's $180 a year. Plus, you're missing out on the 4.5% interest you should be getting in a modern, automated ISA. On a $10,000 balance, that's another $450 in lost growth. You are losing $630 per year to structural incompetence. If you invested that lost $630 every year at a 7% return, that's $8,642 in your pocket after 10 years that you simply handed over to a legacy bank for zero value. If that math just blew your mind even slightly, do me a favor. Flick the subscribe button, give this video a thumbs up. It lets the algorithm know we're actually talking sense here. Now you might be thinking, Walter, how do I actually stop the drain without losing access to my money? It's about separating the utility from the storage. System number 1, the split flow architecture. Never keep your storage money in the same bank that handles your utility spending. You need a high-velocity checking account for daily spend. This is where your paycheck hits. Then, you need a storage ISA that is strictly for your emergency fund and long-term holds. System number 2, the fee gate check. If your bank charges a minimum balance fee, leave, period. It is a legacy tax. Use a feeless digital native institution. These banks don't have physical branches, so they don't have the overhead. They don't need to bleed your capital to pay for a building you never visit. System number 3, automate the sweeps. Set an automated rule. Every payday, your high-velocity account sweeps all but a specific, calculated buffer into your storage account. This keeps your invisible leaks contained to the smallest possible pool of money. So if a fee does hit, it's hitting a bucket with $50 in it, not your life savings. Here's what most people don't realize. The bank hopes you're too busy to notice the compounding effect of these fees. Because when you're busy, you're compliant. But there is a second, even more sinister leak, the opportunity cost leak, which happens when your money is sitting in a traditional account and not actually doing any work for you. And frankly, that is where the real wealth is being lost. Once you've successfully plugged these banking leaks, your capital will actually start to stabilize, which finally lets you move to the next phase, building an automated wealth engine that doesn't just sit there, but actively works to outpace the market, which is why you need to watch this next breakdown on the velocity of money loop right here. Before you go, don't forget to grab your free bank leak audit checklist below this video. Link in the description.